Imagine if you could go into Decentraland, put on your VR goggles and see the future price action. Well, that's what we were able to do. We pegged it to the T, and Decentraland is following textbook technical analysis when it comes to Elliott Wave and Fibonacci. And today, you're going to be flabbergasted and amazed at the analysis on how on point it was based on human psychology of buying and selling behavior. And it doesn't only apply to Decentraland, it applies to most cryptocurrencies. And we can see identifiable patterns in advance of seeing the tops in advance and seeing the bottoms in advance. So today we're going to break it all down and see how we peg that top, but also the opportunity right now with Decentraland and how it's very likely to take off to make all-time new highs, but based on logic and mechanical behavior. No FOMO, no fear of missing out, no emotions. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. All right, with Decentraland, so we did a video on, the first one I believe was on November 13th. And what I said was look, Metaverse is a huge deal. You know, Facebook just changed its name to Meta on the 28th of October. And boy, did Decentraland take off. Like, Decentraland was doing well, but it did this. Look, it just exploded to the upside. And it looked like it was making what I call a wave 3. And what I said in the video is Decentraland is exploding. It's the most searched crypto right now. But is it the right time to buy? And my conclusion was no. Why? Based on human psychology of buying and selling behavior. We put the fundamentals aside, we put the hype aside, and we just look at the price and the psychology of the price. And look what happened next. This was just unbelievable. Unbelievable. Check this out. So I've just drawn it on the chart. Let me just delete these red lines. So this is where we were when we did the video. You know, we were projecting in advance. We should see one last spike to the upside, and then start to see a wave 4 correction. And typically wave 4s happen in an ABC style correction. And look what happened. It just doesn't get much better than this. Look at that. It's perfect. It's perfect. You know, it made one more upside movement for a wave 3 and it's made a typical ABC or wave 4. And that's what we're going to look at today. We've also had another move like this. We're going to look at that also. But we're going to really break this down. And I highly encourage you. In fact, I challenge you. Take my free Elliott Wave and Fibonacci Masterclass, because I've created a course, because we're going to cover a lot of stuff today, but I'm going to cover it at quite a good pace. But my Elliott Wave and Fibonacci Masterclass, which is in the description box below, covers everything that I'm going to cover. And if you like it, I got a course. It's Elliott Wave and Fibonacci, 90% discount right now. And I break it down for you. All the Elliott Wave stuff in terms of the patterns, the waves, how you can make the method and see the method behind the madness, and also the Fibonacci ratios. There's relationships with one wave to the other. And really is how we're going to go into today and how we projected things in advance. And you want to have this skill set, because most people are buying at the wrong time, because the emotion of greed or euphoria or optimism is actually the wrong emotion to be buying. Funny enough, it's almost the reverse. You want to be really getting ready to take profits at that point. And that's what we spoke about with Decentraland. And when there's most pessimism, when there's the most fear, often that's correlated with a correction and a trend reversal. And often when you've got the probability in your favor, that might be the best time to buy. So take the free Elliott Wave Fibonacci Masterclass. If you like it, you'll take the course. It's only £97. We made it really, really cheap. You'll get invited to my private Telegram. We do weekend workshops. You'll get more access to myself with my private community. We've got a phenomenal private community. But today, we're going to focus on Decentraland. We're going to break it all down. It's one of my absolute favorite things when it comes to Fibonacci and Elliott Wave. So this was the chart for Decentraland. But what I'm going to do is, with your permission, I want to just delete all of this and just go through at a good pace, but knowing that, you know, as soon as there might be information that I cover that's not clear, pause, go take the masterclass, and then come back, because I cover the breakdown of the masterclass, and in the course I break it down to all bite-sized chunks. So let's just delete this. We've got this delete button over here. Let's just delete all this over here. So we're going to start with a fresh, clean chart. And what I want to do is I want to take the data back. So I'm using a software called TradingView. They have a replay function. And what we can do is we can take the date back to the 13th of November when I first did that video, which was around here. And this is what the information looked like at the time. At the time, and there were some big clues, massive clues, that what we were saying had a very, very, very high probability of occurring. And what you're aiming to do with this kind of analysis is be the casino. The casino always wins. But why does it win? Well, it wins is because it has the edge in its favor. They create the games so they have a 3 to 5% edge in terms of they've got an extra 3 to 5% probability of winning, and therefore the house always wins. It's statistics. And that's what we're aiming to apply here. We're trying to get the edge in our favor by looking at human psychology, buying and selling behavior, which was figured out in the 1800s and the 1900s. And then when we see that probability, we go with that. Doesn't mean it's always going to play out, but it means the probability is in our favor. So if you're playing poker, you might have a phenomenal hand and it's got an 86% chance of winning. Well, then you play that, you play the odds, but you've got a 14% chance of losing, and that's still there as well. So we always keep that into mind. Hence, I say probabilities, never certainties. So let's get on with this. Right, what we're seeing here, right? Let's just take the data up a little bit more, because I remember when we did it, it was just the day before here, but this is what we're looking at. And when I'm looking at this, what I clearly saw was, we've got this nice move to the upside over here, this nice move to the upside over here, and then a downside movement. And this is what I call a wave 1 and a wave 2. Markets tend to move in 5s and 3s. 5 on the way up, and then 3 on the way down, but the reverse is also true. And then when we saw this movement happening, this incredible move, like if we look at the date, right? Facebook just announced its name change to Meta, and then boom, this optimism comes in and it just explodes to new highs. And we have to determine what is this looking like to us. So that's what we're going to go into today. So the first things first, we call this a wave 1. I'm going to do it relatively fast, but again, if anything is confusing, I break it down in much more detail in the masterclass. So now what I'm looking for straight away is something called a wave 3, right? A wave 3. And typical wave 3s have a particular ratio in relationship to a wave 1, right? So I'm going to do this thing, and I cover it in the course in a bit of detail, is I'm going to measure this wave 1 and project it from wave 2, and there's 2 lines that we're going to see. These are typical end of wave 3 price targets. So I'm going to do it from over here. I'm going to measure this, and this. And if you want to learn this, do I encourage you, I challenge you to take the masterclass. You'll really like it. So here we've got these 2 targets, and we can see we've smashed past this one, right? We've smashed past this one, and it's fast approaching this one. So we can actually delete this one and go, look, this looks like a very overextended wave 3. That gives us very valuable information, right? When you're reaching the extreme of a ratio, it tells you you're coming towards an end of a trend. There's a great saying, the trend is your friend. Ride it until its end, until it reaches its bend. And what we're aiming to do is project in advance, whereas the high probability end of a trend, so you can really either take profits or be prepared for a profit-taking pullback. Pullbacks and breathers, call them breathers. The market sprints and it needs to catch its breath. It's natural and it's healthy, but we can see what's likely to occur with high probability. So let's delete this. Let's get rid of the 1.618, so over here. But this is not enough information for us. But what we've got is something very cool with Decentraland. Very, very cool. Like it's textbook stuff here, textbook. Is this part of the market here, this in itself is breaking down into a 5-wave sequence. That is really valuable information because a wave 3 tends to break down into 5 waves. And if we can identify it and if it's clear, we want to use that information. And we're going to use something called an end of wave 5 price target. That's going to help us narrow down what's likely to occur. So let's just draw this out, right? We're going to draw this out. This is what I saw in advance. This is what we did in the video. A wave 1, a wave 2, a wave 3, a wave 4. And what looks like a wave 5 is forming, right? And we don't know where that wave 5 is going to be, but we know the range is likely to be. And because this high was exceeded over here, this is looking very healthy, very clean. And with experience, it becomes quite obvious. So what we're looking for now is an end of wave 3. We're going to project this in advance. And by the way, we did this in the video. But I just want to recap because we're going to take it up to today's date and what we should look for next. Because if I bring this back up, This is what we said in advance. I drew this over here, but we did this in advance. And I can't emphasize that enough. The market price was around here, and we said we should expect a wave 5 over wave 3, and then a correction. And then look what happened. It literally just was textbook. It's just like, literally, it doesn't get much better than that. Seriously, it doesn't. So when we're going back to this, let's just look at this and go, okay, what information do we have right now? Well, I'm actually going to jump into a weekly chart, top left. I've made it at the appropriate date. It's the correct date. We're coming towards the end of November. And the key thing I want to focus on a weekly chart is the momentum, right? By the way, I cover this in the course, so I know I'm moving around, but we're looking for clues. We got a Sherlock Holmes hat on, and we're looking for clues that's going to give us the edge. It's going to make us the casino, and then we act with the edge. That's the whole idea. That's the whole science and the mathematics behind this. The blue and the red line is above this black line, which means overbought. It means, and it's telling us that it's insinuating that the upside movement should be limited and we should expect sideways to down, right? And when we correlate that to the type of pattern that we're seeing, we can anticipate in advance what that sideways to down is likely to be. And what we're seeing is after a wave 3, which we're going to narrow down a bit, we should see a wave 4, right? And the video that I did on the 13th of November, it was literally just saying, guys, be very aware, we're likely to make a top very soon. So you should be looking to take profits at this phase because we're probably going to see a pullback for a wave 4. Right? That's the language that we're speaking. That's what we're aiming to see in advance. So now let's just finish up and let's just keep it relatively sharp on this part of the market over here. 1, 2, 3, 4, 5. We're going to do something called an end of wave 5 target. I cover this. It's actually even in the masterclass, the free masterclass. We're going to measure wave 1 to 3 and project it from wave 4. But what you're going to notice is that we have two specific lines, 62% and 100%. And it tells us we've got two zones. We've got this zone, which is actually the higher probability zone, but also we have the maximum over here. So now we've got this zone that we can say, okay, it's likely we're going to see a wave 3 top. This is what we said in the video. So now let's just play out the data. Let's also look at the momentum. The momentum, I've got a slow moving momentum indicator, but it normally correlates, right? So we go bump, 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 and then the market started to move down. And you can see over here with this particular momentum, there's a few momentum indicators. I cover this in the course. You know, you're basically looking for, and they both tell us the same thing. You're looking for the bearish momentum. We had one here, and we had one here. And we can see the second one correlates with the top. And it's in this price zone. And this is a big movement to the downside. But this is a nice impulsive sequence. And then we did a follow-up video saying, look, this looks like the beginning of the correction. So you should have taken profits. And we did this in advance. That's the most important thing here. Most important thing. So now, let's stay focused and go, okay, what's likely to occur next? So we go, okay, we're happy with this. We've pegged the top of a wave 5 of a wave 3. It's looking good. We don't want to remove the question mark just yet. But this movement here, this downside movement is bigger than any previous downside movement in this trend. So we go, this is likely that we're going to see a big correction. And the few typical, most common things when it comes to a wave 4 correction, one of them is that it ends more often than not in the range of the previous wave 4. This is the previous wave 4 over here. Very valuable information to us. It can, it doesn't mean it's going to happen. It's more of a guideline and it just gives us an indication. But also one of the 3 Elliott wave rules is wave 4 should not trade into the range of wave 1. So we know this is the likely area and it should not go below this area. But what we also can do is I'm going to get rid of these now. Let's just say we're happy with this. We pegged it. This is like bang on. It's just perfect. It's just perfect. It doesn't get much better than this. Now what we're going to do next is we're going to do a retracement for our wave 4. And then we're going to very soon get to today's data and then what's likely to occur next. We're going to do this measurement over here, this wave 3. And most wave 4s, most common actually is 38, but the maximum is 62%. We want to be aware of those. But also, we want to be aware of momentum, and we also want to be aware of pattern. Pattern is going to be key. So as we unfold this data, ideally we want to see 3 legs, 3 waves, ABC. That's the most common when it comes to a correction. We got this first movement to the downside, but we've not seen 3 legs, right? So when I see this, I go, this just looks like a wave A. This just looks like the first leg of a correction. So we would anticipate, and we said this again in advance, time and time again, we anticipate 3 waves. And when we get 3 waves correlating with price, so then we've got pattern price, and then we can look at momentum, then all of a sudden it's a different ball game. So now we had this movement to the upside and then to the downside. Bang. So now we've got this very clean A, B, C structure forming. So what we can do in advance is we can go, okay, we've exceeded this one. I'm gonna speed this up a little. I'm just gonna measure with, I'm gonna just draw this out. I wanna go, look, this looks like a wave ABC. So it looks like a wave A, B, and looks like a wave C forming. Wave 3, now we can go, yep, that looks confirmed. You know, it's a deep correction. And then what we're going to do is we're looking now for a wave 4. End of wave 4, which would also be the beginning of wave 5. And wave 5 would exceed this new high. That's what we're looking for now. So now, let's just do one last thing here. I'm going to do this here. Oh, it's going to measure the wave A, projected from B. And these are the 2 typical ratios for an end of wave 4. It's looking like this 62%. It's going to be more significant than the 100% over here. So we've got this range over here. So let's just unfold the data a bit. And what I want to do, wow, look how deep that went. It actually went, you know, the 100% is more common, but because it was beyond the extreme, look how extreme this went with Decentraland. Now, what would invalidate the wave count is if this price goes below this wave 1, we'll need to reevaluate. Yeah, it's objective, mechanical. If it goes below this point, you know, maybe this is not a wave 3, and we need to reevaluate. So that's a key pivotal price zone for us that we want to be very aware of because what we're doing here, just so it's clear, we're actually ignoring the metaverse. We're ignoring Decentraland, and we're ignoring the fundamentals of the project. What we're looking at right now is the psychological mood of the millions of participants buying and selling Decentraland. They've got different reasons for buying and selling, but what was shown and proven over a century was that most markets are driven by human emotion. And there's different feelings of the market, of fear and greed, optimism, pessimism. And wave 4, what we're looking at here, is a profit-taking wave. There's this massive upsurge over here. People made phenomenal profits. And there's a profit-taking wave. And it typically follows these cycles. So now it's looking like we are approaching, like people might be panicking over here, but this is now approaching the end of a wave C of a wave 4. We could even break this down a bit more, but this is very, very high probability. What we also would look at, if I just take the date, actually, let me just go back here. What's the date here? 22nd of January. If I just go to the weekly chart, and if we just pull up the momentum, and we go, where is the 22nd of January? Look at the weekly momentum now, right? If I just draw this like this date here, on the weekly momentum in the top left-hand corner, look at the weekly momentum. All right, do you see it? The blue line has crossed over the red, which tells us that now the momentum has gone from, it's been down to now being up, right? It's oversold. They said the downside movement now should be limited, and now we should look for upside movement. Really important. By the way, I cover this in a lot of depth in the Fibonacci section of the course. So if you do the masterclass, you like it, and you buy the masterclass, the course is only £97, but I break it all down on how you can combine momentum, pattern, and price. So then you become the casino by having the edge in your favor. Doesn't mean it's guaranteed. It just means it's very high probability. So now we have this information at this point, which I would have taken into account when we're looking at an end of a wave 4. And then we are also looking at, we want a faster indicator, we want the 13, right? Let me just get the 13. On the next bullish reversal would more than likely coincide with the end of the wave 4. So the next bullish reversal, because these lows match up quite nicely with these lows over here, these lows over here, these previous lows over here. It's pretty nice, pretty clean. So now the next bullish reversal would indicate this. So are we looking at this information? So now let's just zoom in like this, and let's just see what happens, right? The momentum, we're waiting for it, bang. Okay, the blue is now officially, not yet, we need one more day, bang, the blue has crossed over. So now this is likely to be the high probability low of the wave 4 because we've got the momentum on the weekly pointing up and the daily's made a bullish reversal. So we want to be very aware of that. It's not guaranteed. Doesn't mean this is called a trend reversal entry. This is that you're catching the end of a wave 4 for a whole new trend. But because it's the deep wave 4, sometimes it's better to allow it to move up and then do a correction. So what I'm going to do next, hopefully this is making a lot of sense to you. But once you take the masterclass, it'll make more sense because a lot of information here, but we're really looking at 3 things: momentum, pattern on a few degrees of counts, ABC of a wave 4 right now, and price. We're looking at Fibonacci ratios. Really, really important, very, very powerful. There's one more, there's another ratio. I'm not going to cover the details of it, but we just measure this to here, and project it from here. And that red line gives us a massive clue. So I look at these things all the time. So now let's just unfold the data. Let's just see how it unfolds. But look at this, look at that. I mean, come on. That's just phenomenal, right? Look at that. It's like magic. It's like magic. But it's not magic. There's method behind the madness. Arthur C. Clarke said it best. He said, any advanced science or technology is indistinguishable from magic. And we're looking at the science of psychology and sociology, human mass herd behavior on buying and selling. And the buying and selling, it's like psychology is being reflected to us in the price movements. And that's what we're trying to read here. That's what Ralph Nelson Elliott figured out. And when I was doing, Forex trading, I was featured in his book, and I was just doing pure Forex, meaning currency trading. We're just looking at charts. Literally, they don't really care what the ticker symbol was, which means, is it Decentraland? Is it Bitcoin? Is it Ethereum? Is it the Japanese yen against the US dollar? Is it the Canadian dollar versus the Mexican peso? Is it the Swiss krona versus the pound? It doesn't matter. We can just look at the buying and selling behavior. And that's what we're looking at here. So we're going to finish up now because I want to finish with the punchline, right? Okay, let's just now get rid of this. This now, to me, says, okay, this movement to the upside is bigger than any form of move to the upside. We've got a clean ABC correction. So it's looking like this is a wave 4. That holds. Everything's looking good, looking healthy. Now let's just get rid of these. We can get rid of these. We can get rid of these. And just keep the chart nice and clean. I'm going to keep the wave 4 correction, the question mark there, because ultimately, until this high gets exceeded, the wave 4 is not confirmed, right? So we don't want to count our chickens before they hatch, but it's definitely done the minimum movement. The minimum movement I would expect is a 50% of this movement to the way down here, right? So this would be a risk-free kind of zone, getting risk-free. It's moved from $2 to around $3.50 to $4, thereabouts, right? So now let's just take it up to today's data. Let's just see where the market is right now. Oh, in fact, I wanted to do something. Let me just do this, actually. Bear with me 2 seconds. I'm just going to take the data back again. There was a couple of very, very important points I wanted to make here. So I'm gonna zoom in over here. I'm gonna zoom in over here. So this looks like a trend reversal over here. It's not confirmed, but it looks good. It looks healthy. But at this point here, when we see a movement to the upside, and then we see a 3-wave movement to the downside, A, B, C, I would count this as a potential. I would look at the weekly chart as well. I would look at this as a potential end of a wave, A, B, C. And I would do, and this looks like a mini, I'm going to draw it like this. It will make perfect sense. Because this is an important reminder that we're doing probabilities and never certainties. And just even if it's looking like a textbook ABC style setup, it doesn't mean it's going to hold. So this is what we do. We look at this and we go, okay, Jigir, this looks like a wave ABC forming, really, really clean. If it holds, it's going to be an explosive move to the upside. And Decentraland has shown that tendency before. Where is a good entry point? So what I would do, I'm going to do this one fast. It's a wave 2, end of wave 2. Wave 2 is a retest of a wave 1. Most common is 50 to 78.6% corrections, right? So we're in that zone. But then we'll measure wave A and wave B. And wave A and B have a relationship. 100% is most often the end of a wave C. So I would even look to get rid of this and go, okay, it's looking kind of like this zone here. Very, very important, very valuable information. I'm just going to do another one. There's something called an external retracement. I'm going to just do this quite fast. This is all in the masterclass, by the way. I cover it in more depth. In the course, I break it down to 3 to 5 minute lessons. So we've got this real zone over here. And then I'll look at momentum. I would go, okay, this looks good. I want a faster indicator. Again, I'm going really fast now because I'm aware that I try and keep my videos at a reasonable time, but when the information is like this and this clear, I want to cover it. I'll go on the next bullish reversal, which means when the blue line crosses over the red, I'll look to go long, look for buying positions. The date over here is the 21st of Feb. I want to just look at where was the market 21st of Feb. Okay, so this I wouldn't have taken really because the 21st of Feb. Let me just make sure I'm getting it right. 21st of Feb is over here, right? The weekly momentum is bearish on the 21st of Feb, and we don't want to go against that trend, right? So this would have protected us, right? We want to wait for the bullish reversal. So for me, this wouldn't qualify. So one of the other key secrets to becoming a casino is having a trading plan. And one of my mentors taught me this. He said, Jagir, look, a trading plan doesn't guarantee success, but the lack of one does guarantee failure. And the way you want to think of a trading plan, it's like a business plan. It's what are my rules and guidelines for me to look at positions. And one of them should be that you always go in the direction of the greater trend. So over here, when it's looking like this and it's looking like this, we are looking for buying opportunities. When it's like this, we are either looking to take profits or stand aside, right? Or stand aside. Over here, this would have protected us from what we're about to see. Right, and sometimes prevention is better than cure. So we wouldn't have taken this position, right? Because it goes against if that was in your trading plan, unless there's a few other things. So let's just unfold this data. Bam, we get the crossover. The market moves to the upside. It does the minimum expectation, but it has no follow through, right? It has no follow through. So it's not looking like this. Doesn't look like this. This looks impulsive. This looks corrective. So this is not showing good signs of strength. Over here, and the market unfolds. Let's just keep unfolding it. And it makes a new low. And we're going to go to today's data now. Let's just go to today's data. We are over here now. This is where we are today. Right? So now, let's just quickly reevaluate a couple of things. Then we're going to wrap up. I know I got quite excited when I see these chart patterns unfold. I love this stuff because it's really, really, really powerful. Right? So now, this now looks like a wave 2. But what we have now, this is important. If we go to the weekly chart, again, we're just going to get rid of these. I'm going to go to today's data. Look at what we have. We now have a bullish reversal on the indicator that tells us the momentum is now up. It's officially up, right? So that says, right, we got the green light to now look for potential buying opportunities on the upside. The trend is your friend. Ride it until its end, until it reaches its bend. So take my Fibonacci Daily Wave Masterclass. It's absolutely free, but we cover this stuff in a lot of depth, and you'll like it. Then what we're looking for is the next bullish reversal, which we're live now. This is literally today. Right? This is today's data. But let's just finish with what I'm going to finish on, because otherwise I'm going to keep going into detail. Is what I want to really, really get across on a macro picture is this. Decentraland is following textbook Elliott Wave Fibonacci. Doesn't mean it's going to continue to do so. However, it's likely to do so. Right? Very, very important. Let me just clean this up as well. So what we're looking for now is, so we're really, really clear. But the bigger lesson is these patterns unfold time and time again with all and most, should I say most? I'll say most cryptocurrency, 50 to 60, 70% of the time. And when they're this clear, we want to know when to be selling, when to be buying, when to be potentially buying, right? So you got that guidance. It's like it's a guidance, a guiding system to get the probability in your favor. So what we have is a 1, 2, 3, 4. Looks good for a wave 4 because of this movement. So we should see all-time new highs. So we're going to finish on where is a high probability end of wave 5. Well, it's actually the exact same thing that we did for this part here, But now for the macro picture, this macro picture. So what we're going to do is we're going to use this particular tool. We're going to measure wave 1 to wave 3. I covered this in the masterclass. So, and the typical maximum is 62 to 100%. Right? It's likely to be this zone over here. We're going to also do something called an external retracement. We're going to measure this wave 4. There's 2 end of wave 5 targets. I'll give you these ratios in the course. And we can see that we've got this cluster. So we've got these 2 zones over here. And what I see is this. We've got one zone over here. And the other zone is much more tight. It's likely going to hit this zone and taking a few other things into consideration. What we're likely to see, again, not guaranteed. Let me actually delete these now. Let me delete this. Is we're likely to see a wave 1. Looks like some type of wave 2 forming, not confirmed yet. An explosive wave 3. Some type of wave 4. And then a probable wave 5. And let's just do it like this. Let's just change this to blue. And let's just keep the waves in. And let's keep it ABC. Yeah, so this is likely to occur with Decentraland. Again, probabilities, never certainties. But to date, it has been following textbook Elliott wave and Fibonacci ratio. But there you have it. Excuse me. There you have it. Be mindful of this. Be mindful of these zones. Anticipate a 5-wave sequence similar to this. 1, 2, 3, 4, 5. Because this one was overextended, it's likely that wave 5 and wave 1 are going to be very similar. And the 2 ratios, I'm going to do this for you as well. I'm going to do it on the side over here. I'm going to measure wave 1. I'm going to project it from wave 4. And you can see it's nowhere near, right? It's going to more than likely be the overextended. It's normally 1.618, but that doesn't even extend above quite deep corrections. It's probably going to be 2.618. So be more likely to be in that zone over here. So there you have it. I think that's everything we covered. It was a masterclass on Decentraland. It's a metaverse project, but putting that aside is just following textbook Elliott wave and Fibonacci ratios. And again, take my free Elliott wave Fibonacci masterclass. I've done something quite special. It's 90% off. It's £97 for the full course, and you'll see I break everything down when it comes to Elliott waves. The basics, the 3 rules. There's 3 key rules and guidelines, and I really articulate them so you're really, really clear, and you can loop them as short lessons. We go over this as well, the macro, intermediate, and micro counts, how to see waves within the waves, and then how to combine Fibonacci ratios with Elliott waves. And when you see the power of it, hopefully you've seen the power of it today, you want to be sharpening your axe so you're getting better and better on this new $1 trillion trend, right? We're on blockchain, which is going to revolutionize the world more than the internet itself. It's here to stay. We've got this token economy, and the tokens hold value, and they have a utility in these different projects in different ways, whether it's a governance token, whether it's a utility token, and all types of different tokens. But a lot of people are speculating on the token. Therefore, the psychological buying and selling behavior becomes quite identifiable in advance. So you can know the best time to buy, the best time to sell, or even if you've got a long-term buy and hold strategy, you can just see what's happening and you can prepare yourself for a 40% pullback that's likely to occur that we spotted in advance with Decentraland and other projects also. All right, today was a long one, I know, but we're going to finish with a quote from my book. The quote is from chapter 3. It's Confucius, a bit of wise words from Confucius. He says, "It does not matter how slowly you go as long as you do not stop. 1% at a time doubles your performance every 70 days. Yeah, that's right. With a compounding effect, if you can improve 1% a day, in 70 days, you'll be twice as good as you were today, right? So 1% at a time. So it does not matter how slowly you go as long as you do not stop. I highly recommend, I'm biased. I know I'm biased, but take the free Elliott wave Fibonacci masterclass and learn how you can identify psychology of buying and selling. And sometimes when it logically feels right, because the optimism's there's positive news, but the pattern could be saying the reverse. And we saw that with Decentraland. It was very optimistic, right? Facebook just changed its name to Meta, massive surge in price, and the normal behavior or the kind of school of thought is it's going to keep going up. This is going up and up and up, and it's never going to come back down. But when you see a 5-wave sequence, you can be 2 steps ahead of the market rather than everyone else who's 2 steps behind the market. All right, like, subscribe, show your support for the channel. It means a lot to me. And keep training, and I'll see you soon. Hopefully, in one of my live workshops. If you take one of my courses, you'll get an invite to my private Telegram. All right, see you very soon.